Good afternoon, everybody, and a word of welcome from me. I'm Mark Ingham. I'm on the board of the IAS, and we are sort of particularly thankful to Advanced presenting their full year results to analysts and fund managers today. It's really nice to see Carl looking so healthy. When I stood up here a few months ago, Carl had just had a op, and we were really wishing him well and that he would come back strongly, and it's really super to see Carl with us today. Congrats to Gerard on your new appointment as CEO. Carl, I know you've been busy this last year with the results, the finances, and it's really good to see progress, top line, some really good sort of qualitative sort of improvements. I think I was saying to Carl earlier that I think we're starting to see the prospect of a profit appearing on the P&L. So for us, and I've followed certainly Carl in his earlier days, Presmed, and the great strides that he's made in rolling out daycare in South Africa, really a pioneer. And it's good to see that sort of footprint increasing in SA, and also having a very strong base, which Mark is running in Aussie. So we're looking forward to yet another insightful presentation. We thank you for your good disclosure. As analysts, we really merit that, and I think as you build your rating as a share, that is going to be very important too. Carl will say a few words. I know Gerard is, and Carl, you'll take us through the finances. So we look forward to that. Thank you kindly.
Mark, thank you very much. I hope everybody can hear me. Thank you. The first time I came here for a presentation to Wanderers, Mark introduced me, and thank you for that. And today is hopefully not my last time, but my last time as a CEO of Advanced. And thank you for the opportunity. Thank you for all of you I could work with and who I could share our philosophy and our objectives with. Thank you. And on that note, I would like to get started. Yes. Thank you so much. First of all, I just want to mention, unfortunately, I've got a meeting later this evening in Witbank or eMaghlageni, and I'll have to leave after I've spoken here today. It's not that I'm trying to avoid you, but Gerard is here, Carl is here, and there are a lot of our other associates that you are free to chat to after the meeting to see if there's anything that you would like to know other than that. I will answer questions after my presentation here, so if there's something specific, I will bear with that, but after that, I'll unfortunately have to leave. Thank you. So we are looking actually at Advanced Health, where it's standing at the moment, and with the announcement of our results for the year ending June 2019. And what I would like to say, Advanced has continued to grow and position itself as a leader in day hospital in South Africa. We are definitely by now the leader of the industry in South Africa. And just to mention, I had lunch today with one of my competitors, and he said to me he's actually quite surprised that over a period of 5 years, we've grown to show a turnover double what his group is showing, and his group is the second largest group of day hospitals in South Africa. So although it was a tough going, we are proud of what we've achieved, and we believe that has been made part of the South African day hospital industry. It is a lucrative industry. It is actually an industry, in order to really be lucrative, it needs volume of patients, and this is what we are focusing our future on, and this is what I will be talking about a little bit later. Australia, Mark, thank you very much for being here today. Mark always makes a point of helping us with our annual presentation, and I'm very happy that Mark is there to run Australia, and he's also going to convey my thanks and appreciation to his staff in Australia, and I think they are doing a tremendous job, and we are very happy to have them as part of our organization. Thank you. In South Africa, we are making pleasing progress in getting more funder support and a strong focus on marketing. The funder support is becoming a much stronger emphasis in the advanced strategy for the future, and this is something that Gerrit is helping me with, and I'll talk a little bit more about this later. We all know that healthcare is part of a third-party payer system. What does this actually mean? It's actually very simple, that the buyer of the service does not pay for the same. And quite frankly, if the service costs 10 cents or 10 rand, it doesn't matter to the buyer, because he's not putting his hand into his pocket, he's not paying for it. The cost effectiveness is not considered by the buyer. And like I said before, if it's a price that is double what it should be, the buyer is not worried because he doesn't pay. In fact, we say the medical scheme pays, so who cares? And I think that was the wrong of the system in the past. The fact that the system didn't make provision for the party that is buying the service to be concerned about cost. Here today, I'm talking a lot about cost. Believe me, quality is just as important as the cost. And believe me that the quality of the surgical procedures performed in advanced day hospitals is top class, and all our nursing staff is very much focused on rendering a top quality service, to the extent that anybody who comes as a patient or who comes with a patient very often makes remarks and says, I'm actually surprised how well this is functioning and how easy it is going. Having said this, and also mentioned in specific medical scheme support, I want to point out the following. Patients have to make co-payments. A lot of government management strategies say no, they don't believe that patients should make a co-payment. We believe that to make the patient part of the decision about cost, he must get involved. If the patient can get a procedure done at 8,000 Rand in a day surgery and doesn't have to make a co-payment, then he's happy to use that service. If he goes to an hospital and has the same service done at 12,000 Rand, then I think he should be obliged to make a co-payment, so that he is more cost aware, and that we are moving away from the system of a third-party payer, and that we make the patient a joint payer with a medical scheme. In this way, we straight away see that the focus of the patient is much more centered on cost than it was before. This is a strategy that was implemented by Discovery in January this year. In fact, Discovery came forward and said, for our low-cost schemes, we put forward that all the members in that scheme will have to obtain services which are available from day surgery facilities, from these facilities. If they don't do that, they'll have to make a co-payment for the same service rendered in a hospital, unless there is no day surgery nearby, or unless a doctor specially requires the patient to go into a hospital, or that the doctor says that day surgery hasn't got the standard that I'm looking for. Then we said this must be conveyed to Discovery, so that Discovery can take appropriate action and appropriate steps. Sadly, at the time, negative publicity was put across, and this was very distressing, to the extent that February this year, Advanced showed a much higher turnover than any of the months before, because of the Discovery strategy. When suddenly in February a negative remark was made by a professor at the university, stating that any surgeon who takes a patient into a day surgery puts this patient at risk. I'm sure that professor has never been in a day surgery, but what he didn't mention is the son, his own son, is a specialist, and he does all his surgery in one of our advanced facilities. That, when we mentioned it to him, he backpedaled and said, sorry, this and that. But the unfortunate thing is, negative publicity carries by far more weight than any publicity that you try to stimulate to counteract it. what was interesting about the situation is that Discovery said, in order to satisfy our patient mix and the market, we've been approached now by various hospital groups who said, no, we want to be part, our hospital wants to be part of this day surgery network. And Discovery was keen to absorb these hospitals because that showed that they were listening to the press and they were listening to their members. And at the same time, they actually benefited because these hospitals came in and were prepared to give Discovery a substantially better price because of what has happened with the day surgery situations. The other aspect which quite a few of the medical schemes point out over and over is the concern that they've got that the footprint of day hospitals in South Africa is not what they would like to see. There are still not sufficient day hospitals in South Africa, and quite rightly. If Mark is going to talk to you a little bit later, he'll give you a comparison of the figures in Australia and also the comparison of figures of day surgery to hospitals in the United States. Is by far better ratios than we've got in this country. But what we say to these medical schemes, if you go and support strategies that build that footprint, you will see that this footprint will grow as number one, and as number two, you're actually in a position that you are bringing down the cost of health care. So my message to medical schemes is support the footprint. This will bring down the cost of health care. And this is essential in South Africa, especially if we look at the negative remarks that are coming from very often governments, but also people in the community saying these hospitals are too expensive. And we are trying from our side to see where can we make a contribution that costs are brought down, and this will also be advantageous to the private healthcare environment in this country. Yes, there is a lot that has been published and stated and mentioned about national health insurance. What is going to happen? Is NHI a doom for South Africa? Is it a big negative? And we see so many different viewpoints that I don't actually want to really express another different viewpoint, but what I would like to say, that day hospitals in South Africa are very well positioned to support NHI from a cost-effective service point of view. There are discussions taking place, and I believe that if government is keen to work with the private sector, there will be a lot of demand for the services that day hospitals are rendering, and I'm quite sure that government would benefit from it by buying these cost-effective services. I just want to say, by the way, my last slide, so I won't keep you much longer or bore you much longer here. I just want to talk about the past and the future. And I just want to see that I first of all will get Gerrit van Emmenes to introduce him to you. Gerrit is sitting over here. Gerrit, I would like you to stand up just that they see what you look like. Gerrit, thank you very much for joining us. And there's a very specific reason that we have opted to appoint Gerrit as a CEO of Advanced. Gerrit has got a tremendous medical scheme knowledge and experience. In fact, Gerrit was the CEO of Bonitas for the past 10 years, and my own feeling is that my weakness in the business that I was managing was that I didn't have enough knowledge or enough capability regarding the funders of healthcare. Now, this is why I'm very happy to get Gerrit involved in our organization, and with his connections and his ability, he will drive Advanced forward on the leg that medical schemes are key in the funding of these industries. Thank you, Gerrit. I would like to say thanks at this point in time to our outgoing chairman, Frans van Hoogstraten. Frans has done a lot of work on board level and also at various instances for Advanced Health. I will be taking over from Frans and will run the business hopefully as chairman on the same basis as Frans did in the past. I also would like to thank the rest of our board of directors for their continuous availability and effort to make this a business that is going forward and becomes a profitable venture. I would like to say they supported our drive for cost effectiveness by not increasing directors' fees for the past 5 years. I think I appreciate this from my board, and I think that's a very strong message, especially in an environment where we've had a high inflation rate, and also in an environment where a lot of director salaries are increased on an annual basis. In this specific situation, our board has got the feeling where they said, we are running a business that is supposed to be cost effective. We want to convey a message of cost effectiveness to our staff, and we want to make sure that this cost effectiveness is actually supported what we as directors do. And my thanks goes for that to them. You lead by example. Thank you. Then I would like to thank all who helped to turn the advanced philosophy into a reality. Now, in this situation, I must mention to you that we are working with medical practitioners, with doctors. And if you see how they function and what has happened over the past few years, I would just like to point out to you that many of these doctors are sitting in a situation where the hospital manager, where they've got their rooms, where they've got a theater list, says to them, why do you do all your short procedure surgery at Advanced and not in our hospital? And sort of by implication, that same hospital manager will say to this doctor, if you don't want to fill your theater list to that extent, I might have to look for somebody else who does it. Now bear in mind that the doctor's number one income is what he generates through his practice. And if he feels threatened, then he feels his income is threatened. So a lot of these doctors felt uncertain. Some of these doctors stopped working at our facilities, but my thanks goes to those who, irrespective of this negative remarks, irrespective of the negative messages which they read in the paper, they came in, they stuck to us, they stuck with our personnel and staff, and they worked with us, and they supported us, in fact, on a basis that each of these doctors, their contribution is growing month by month. I'm very thankful for that, and I think they helped us to build this business to where we are here today. It is difficult. I can understand that a lot of these doctors who maybe did a few patients with us and went back to the hospital and said, sorry, I can't risk to get my theater list cut, or I can't risk that another orthopedic surgeon is employed at this hospital. I'll have to protect my income. I don't find anything wrong with it, but I'm thankful to those guys who stuck with us through thick and thin and are still there and supportive of us. The same way, I want to thank our staff. Our staff was very often sitting in a situation where a hospital manager would phone our staff and say, listen, I've got a job that I want to offer you. Don't you want to come and work in the hospital? Because we don't think that Advance will live much longer or will stay alive much longer. In this way, at least you've got a future. Now, that's a hard job for that nurse to say no to, because that nurse is saying, if Advance folds, what do? I can't go begging back to the hospital and say, sorry, here I am, have you got a job for me? No, you can't do that. So what we did, we worked with the staff, and I'm very thankful that a lot of that staff stayed with us through thick and thin. I must be honest, some of the staff left, went to these hospitals that made these good promises, but the bulk of our staff has been motivated, has bought into the theory of day hospitals, love the environment, love to work with patients, and are actually doing such a good job that many of the doctors who work with us come back and say, we haven't had an opportunity in life to work in a theater where we can work so fast and so efficiently and in fact be more productive than in a hospital situation. A lot of people will say, how is this possible? But it's very simple. In a day surgery, you haven't got emergencies. Suddenly there's an emergency in a theater, and the doctor who wanted to start working 8 o'clock this morning is told, listen, by 11 o'clock you might be able to get the theater. So these are all advantages that are played down, but which are key to some of these guys and which are of value to them. I've said to you earlier, I'm not leaving. I will stay on as chairman and as a shareholder, and it would give me great joy and pleasure to be here in a year's time and to share this event with you, and hopefully that Gerrit and them have had an opportunity to achieve what I tried hard to achieve and couldn't manage, namely to make all our facilities profitable. My message to Gerrit. Gerrit, I've enjoyed working with you for the past months. We got to know each other on quite a few levels, and I would like to say to you, the most valuable asset that I'm actually given to you, which is part of Advance, is the staff and doctors that we've got. I think they are very exceptional people. They are incredible. Nurture them, motivate them, grow them. You are working with a formidable team. Thank you so much. Thank you. Thank you. I'm open to any questions, if there are any questions from the floor or anything. If there are no questions, then I can hand over to Karel, and you guys will excuse me, and I hope to see you in the future, and I hope that we are all smiling. Thank you so much. Thank you for your presence, and thank you for Mark, Karel, Gerrit. Thank you.
Thank you. Good afternoon, ladies and gentlemen. I trust all of you are well. Carl, please drive safely. Thanks. Everybody saw the SENS going out this morning at 7:05, and I would just like to take us through a few of the numbers. You're more than welcome to ask me any questions after the full presentation. There will be a Q&A session, and subsequently to that, if you would like to see me outside, I'm also available for some questions. There are some of my financial staff, my financial managers sitting over here, Marnath sitting next to Gerrit, my two group accountants, Kuda and Samantha. They will also take some questions if you would like to ask them some questions. If we look at a quick overview of a situation that we're seeing at this moment, our number of cases in Australia has continued to grow with 9%. We must keep in mind, Mark will talk about more about the Australian market. You will see that it's more mature than what the South African market is. The South African market continued to grow very much in line with what we were expecting at 32%, bringing our total growth for the group to 21%. Our revenue, Australia stayed on par. Please keep in mind that this is all based in rands. So the number of cases in Australia is then basically mirrored by the turnover that we as a group made. South Africa, we've increased our turnover with 38%, and if you compare that to the number of cases increase with our turnover increase, you can see that the turnover per case is actually going up and growing, and that is indicating to us that we are getting a better case mix, specifically in South Africa, and that is very good news for us to see. The turnover for the group as a whole increased with 18%, and we are happy with that double-digit increase that we see for the group as a whole. Our earnings before interest, EBITDA, Australia 67% increase, 21% increase in South Africa, and the group total increased more than 100%. You would see that our EBITDA percentage that we are showing over there is before our discontinued operations for Coffs Harbour, which I will discuss on one of our other slides going forward. Our loss after tax on Australia was negatively impacted by the closure of Coffs Harbour. South Africa has increased its loss with 8%. We must see that in perspective, because if we compare this year to year, Included in our figures for South Africa of the previous year would have been East Rand, that was only operational for 5 months, and for the current year it's included in total. And if we disregard East Rand's figures in, and we compare apples to apples compared to the previous period of all our operating facilities, South Africa would have increased with the 5%. Our cash generated from operating activities, we'll talk about that looking at our cash flow statement, and we've seen very strong cash flow coming through from Australia specifically, South Africa as well, and that is indicating that the group is less reliant on loans going forward. Oops. Oops, something went wrong there. My apologies. All right, thanks Evan. My apologies for the slight glitch. Our exchange rate fluctuations, we were in the lucky situation that for the year under review, there were not very much fluctuation going up and down on our Aussie dollar versus our rand situation. What we did see subsequently to year end, today we checked the conversion rate for the Aussie dollar versus the rand, and we actually saw that it dropped to 10 Rand 35, which is actually in our favor. If we look at our closing rate as at year end, it was 9 Rand 89, and our average rate 10 Rand 15. Now, why this is important for Advance, still the bulk of our turnover and our assets are still held in Aussie dollars. So it is for us good if that there is an exchange difference and that the rand weakens against the Aussie dollars. So that will have definitely a better impact on us. It's virtually impossible for us to try to forecast what the exchange rates will be doing. Our number of cases per quarter, as we spoke earlier, the group has enjoyed a 21% increase, Australia a 9% increase, and South Africa a 32% increase. We must keep in mind that we will be seeing a bigger increase in South Africa as we are getting more support from our specialists, and what Gerhard is going to talk about later on. And then what we will also see is we must take into consideration that our new facility in Simonstown, Harbour Bay, will also start contributing from October onwards. So the trend is definitely going to increase going forward as well. Our group statement of financial position, a few years ago when we started doing these presentations, there was a number of items that we had to highlight. I'm glad to say that most of our balance sheet items have stabilized. So I'm only going to talk about a few items that are highlighted there. And the assets that I'm going to talk about on the asset side of our balance sheet or our statement of financial position are our financial assets, our deferred tax, and our trade and other receivables. Our other financial assets will have both a short-term and a long-term portion. And it's definitely been increased by loans that's been advanced to the value of 3.9 million in Pressmed Group. And then also, if you look at our SENS announcement, you'll see that Pressmed obtained a 19% investment in a company called MetWest, and that is also included into our other financial assets. Our deferred tax, as the group is still in a position of realizing losses, our deferred tax asset increased from close to 61 million to close to 76 million. And we are confident that due to the fact that the company is a going concern, we will reach a stage of where we will be in a position to convert those deferred tax assets in future. Our trade and other receivables, we're in the lucky position that Australia, our collections are quite good. When we did our ECL, we mentioned that we saw that every single debt in Australia has actually been repaid. of increase is in the South African side of the business. And the reason for that is there's a 37% increase, and that is mirrored with a 30% increase due to our turnover. Our equity and liability side of our statement of financial position, we are still in a position of a positive net asset value, and I'm also only going to highlight a few items. Our financial liabilities increased due to loans that was advanced to Advanced Sales South Africa to the value of 54 million, and for Pressmed Australia to the value of 3.2 million. Also see that in both long-term and short-term portion. Our finance lease obligations decreased due to 21.5 million rand that we've repaid, and then new additional leases were obtained specifically in Australia to the value of 5.3 million rand. Pressmed Group obtained an overdraft facility. You will see it's our bank overdraft, 11 million rand from the Bank of Queensland, which we did not have during the previous period. Our group statement of profit and loss. And here is a few items that I also just wish to bring to your attention. The group turnover, as you will see that we've mentioned, we've highlighted, or we're presenting 3 columns. Due to the fact of that we had a discontinued operation for Coffs Harbour due to IFRS 5, we have to restate last year's figures. And that is the highlighted portion over there, and that's also the portion that you will see in our financial statements. We did do a comparison for June 2018 that was audited, and then June 2019, which was reviewed by our external auditors, Mazars. Our turnover is showing the increase of 18%, and associated cost of sales is up with 15%. That is indicating to us that the turnover that the company is producing is of a higher quality. It means that more of our turnover actually goes down to the bottom line, and that there is not such a big component of cost of sales associated with that. If you recall a few years ago, it was the opposite of our cost of sales actually increasing with a higher percentage than what our turnover did. Our gross profit is on an increase, 50%, 51%, both for the restated 52% and 51% for the previous year, and our gross profit currently is sitting at 53%, indicating that both in South Africa and Australia we are containing our cost of sales component, and that is a good indication for us. We've fairly recently appointed a stock manager, which will also ensure that in South Africa that we will continuously optimally buy, and I can see that our cost of sales going forward will definitely be a positive figure that we can look forward to. Also, a very good indication of the costs that we are containing at this moment is that our other operating expenditure only increased with 4% if the 2 years are compared to each other, compared to a 32% increase in the previous period. That brings our EBITDA. We are showing EBITDA because we've got rentals. As you know, the statement will change next year, and we will no longer be showing EBITDA, but you can see that there's a healthy increase of 91% compared to the previous period. And then if we compare to the restatement, it's a 59% increase. What we do not show here, which is actually a very good sign for us, is that our EBITDA in the previous, and I'm talking now about EBITDA without the R, so it doesn't include our rental. In the previous period, we had a loss of 126,000 rand on that line, and it increased to a positive of 17.5 million for the current year under review. Our rental paid, that would have been impacted by the fact that we've got leases for East Rand that was not included in the past. Our depreciation amortization also stabilized. We are now in a position of actually purchasing new equipment for our current facilities, and we will see that increasing in the next financial year as we are opening up Simonstown within the next few months, and our capex expenditure is expected to rise a bit, but it will not have a significant impact on our depreciation going forward. Our loss before taxation from continuing operations is indicating a 41% increase and a 30% increase compared to our restated figures, and that is really a healthy figure showing for us over there. Loss after taxation is also an increase of 32%, and then we have our loss from our discontinued operation. Mark will talk a bit more about the Australian market, but during the period we have made the decision to discontinue the operations of COFS, and it did bring in a 13.4 million rands loss to the group, and the trading loss for COFS for the period was 4.3 million rand, and then the losses we made due to the sell-off amounted to 9.1 million rand, and that had to be absorbed during the year, bringing our loss for the year to a percentage of being 5% higher than what we've expected. But we definitely have to take out that once-off situation that we had with COFS that will not reoccur going forward. The loss attributable to the owners, you will see that due to the fact that just before the closure of COFS, it became a full subsidiary of the group, and that is the reason why there is a higher loss that are actually allocated to our shareholder, our parent shareholder. Our group statement of cash flows for the year ended. We are in a situation that for the second year running, we have positive cash generated from operations, 5.7 million to an increase of 15.5 million. It's almost three times a positive combination that we're seeing over there. We're still in an unfortunate position that we still have a net cash outflow, but it decreased from 13.1 million to 5.7 million for the period under review. As I spoke earlier, during the previous period, we had capital expenditure of 54.1 million, and it decreased in the current period of 15.8 million. There is a portion included in there that we've already had to purchase certain assets for Simonstown, but the bulk of that, as I said earlier, is for new equipment for our existing facilities to ensure that we are able to service new disciplines that do start at our facilities. If I look at the last financing, the last portion of our cash flow statement of how did we fund our shortfalls that we had, and I think the most important line item that we need to look at is that our financial liabilities that were raised decreased from 97.6 million to 63.4 million, and that is definitely indicating that the group is less reliant on outside funding, and we will definitely see that going forward being the case as well. Also, please take note that the amount of finance leases that we did repay was 21.4 million, and that definitely had a negative impact also from our cash balance from 41.3 million down to close to 34 million for the period under review. I'm really not going to spend any time on the changes in equity for the year ended 30th of June. You're more than welcome if you have any questions to ask me over there. If we look at our key financial ratios for the group as well, a slight deterioration in our quick ratio, 0.85 to 0.88, which is still, we are still satisfied with that number. A slight change in our current ratio from 0.99 to just over 1.02, and our net debt less cash to equity ratio increased from 58 to 84%. Our segmental report for the year, it's also in the sense The South African part of the business had a turnover of 162 million. Australia is still the forerunner of 319 million. The profit after tax for Australia, which you will see still includes the discontinued operation, is 9.9 million. South Africa realized a loss of close to 46 million, and there is a slight increase in the turnover that is contributed by the South African facilities, 34% versus 66% for the Australian part of the business. I thank you, and I'm going to hand the baton over now to Gerard, which will take you through the review of the South African facilities. Thank you.
Good afternoon, ladies and gentlemen. Thank you very much for attending this afternoon and for your time. We spend a large amount of time to work out the planning of the sequence of these presentations, and it actually boils down from the tallest to the shortest. You will see we just adjust the microphone down all the time. So it's an exciting time in South Africa. Healthcare is a main topic. It has become a big story, very emotive. Wherever you have money and emotion together, it's always a very tricky situation. But it's also an exciting time to be in healthcare, especially in day hospitals. And if you will allow me, I'm going to do a short presentation, which will hopefully a little bit more like a journey than just reading off bullet points. So where are we? If we do stock taking after looking at the financials, and we listen to Carl that build a formidable business on good foundations, we are fairly close to breaking even and moving into a profitable situation. Something that we like to call in the business world the J curve, when you finally make that turn and you go up. What are the things that prohibited us from this so far? It's a couple of things that we need to look at. As you can see, the revenue is up in South Africa by 38%. It tells us something that the mix that we have in theatre, when it comes to the focus on gross profit, is not exactly optimal. It tells us things that we haven't optimized our theatres to the best. What do I mean by that? We are currently looking at things such as having our theatres open on a Saturday and a Sunday. Yeah, there's a little bit more cost involved because you pay for the nurses 1.5 times on a Saturday and a Sunday, but all your other fixed cost is more or less where it should be. So slowly you're carving away on these kind of things. We need to get more certainty around some of our doctors and specialists operating in our facilities. And most importantly, and I think Carl alluded more than once to, we need to get the funders on board to buy into the business model and see it as an alternative. If you ask me, the sentiment we get, and I've been through the country, not the whole country of all our facilities, but to a large degree, there's an understanding from the specialists and the doctors that day hospitals are going to happen. They are going to become more and more alternative to the expensive acute hospitals with high overheads, where your money is often in bricks and mortar. And they start accepting and embracing the day hospital as one of the ways for them to make money and to be productive and to diversify their risk and become more aligned and a partner to us. What is it that we're going to do? We're going to focus on strong revenue growth on that path and not slow down. We're going to change the disciplines within the theatre slightly. And can I caution, that does not mean at any point in time at this stage that we want any of our doctors to work less or not work in our theatres. a little bit like the airplane model, where they pay for all the seats, and what comes after this falls to the bottom line. So no, we will look at flexibility in the theatres, theatre time, and then we need to optimize the theatres per se. What do we mean by that? If the doctor is most likely the most important role player in my business, or in this case, Advanced Health, then it means I need to make sure that I put him in a position to be optimal, as productive as possible, seamless, and with as little as possible administration and things like that. So we're going to work towards that. Nursing excellence, one of the comments we find often coming back to us is that in a day hospital they always have the same scrub sister, and it helps them for consistency, it helps them with the familiarity, it helps them at the end of the day to be more efficient. So we have a work to do with our biggest role player at this point in time in our business that we need to look at. A bit broader, what are we looking for? We're going to look at private and public partnerships. There's a couple of pilots that we have in mind, which I hope that the board will consider with me in a strategic session, which will soon take place. I'm aiming for October, and that we can bring this closer. There's also a social responsibility initiative that we need to get off the ground. If we want to be part of the future of South Africa, we must participate on all areas. Currently, it's quite popular, where role players such as a hospital and a specialist combine their services, and they offer it for a very small fee to cover their cost, or even for free, and make sure that we change people's lives for them in South Africa. And it's something that we will participate in going forward. Hey, maybe let's talk about next year. I think the first quarter, I am officially 30 days in office. I think I've got a fair understanding of what needs to be done. I have more appreciation for what has already been done, and a focus will be on a dovetail of marketing. I see it normally as a matrix, where we as top leadership need to get involved with our role players and get their buy-in, and simultaneously that the marketing team make sure that we recruit and attract the people we need. Staff excellence, I do believe Carl when he says it's a formidable team, and they've worked very hard to get to this point. I would also like to believe that there's a little bit more capacity that we can extract from you, and we can make it a better place, and I hope that's the case. Capitalize on the strong growth. I've already addressed that and say to you, most of our facilities, if not all, have some space, not all a lot, but overall a lot of theatre time is still available, and we can make that more attractive to the people that come around. The latest addition to Advanced Health Limited is of course Simonstown. A very interesting concept. Why did we go there? The closest acute hospital is 19 kilometers from there, which normally makes it a bit challenging for the specialists and the doctors to travel that way. But it's an affluent area with a message to the market that they're not prepared to travel over the mountain to get the small elective procedures elsewhere done. So we've done our research. We want to believe we're going to be the first. We need to find a way to get the doctors there and organize them in such a way as little as possible inconvenience. And we're looking much forward to see some growth in Simonstown. Then expanding well-utilized facilities. As I said, it's already there. We are venturing in things like sedation room. Dental technology has advanced significantly, and some of it isn't even be done in day clinics theatre, but rather in sedation rooms. So we're going to look at a one-stop environment for dentists going forward. There are some other technologies that we're looking at, rhizotomies, which is for back pain management and things like that. Technology is going to take us halfway into the doors of the medical aids and the members and the patients. In expanding cost-effective care into sedation rooms, which I mentioned already, it's something that's become very popular in South Africa. We follow the international trend very quickly, and it seems to work. And then make day hospitals a smarter, intelligent choice. As I said, we will look at the doctor, who's a major role player for us, and we will look at the funders to bring the members to us. What is it that we can offer them? We can definitely offer them, most likely, cost effectiveness. Internationally or universally, if you look at what are the three aspects that's the most important for any healthcare cover or access, it's normally a triangle called access, quality, cost effectiveness. We don't have that much of a differentiator on access. We don't have that much of a differentiator on quality, but we definitely have a differentiator on cost effectiveness, and that will be what we will be selling to the funders. Then lastly, I'll touch very briefly on these topics. You can ask me maybe on a one-on-one as well to talk about it. What is it about the health inquiry report that comes out at the end of September? They've already indicated that it will be released at the end of September. There's a very strong message around monopolies, in the sense that on the supply side, especially hospitals, you're looking at the three big groups that makes up about 80% to 82% of the market. If you look on the demand side and you look at the funders who's organized, Discovery makes up 55% of the market. So you have clearly dominant role players. The best to illustrate it is go and ask any healthcare provider what makes him tick, and he will tell you there's a few checks. If he receives that, he's fine. If he's got a check from Discovery, Gems, Bonitas, and Paul Met, he's fine. And everything after that falls to their bottom line. And so we do have challenges, and we believe that the health inquiry addressed some of these issues and put more checks and balances in place, or recommend them at least, and would like to change that landscape as it is skew on both sides. There's also some address to the medical schemes on governance and things to structure their business only to the interest of their members. We also see some serious recommendations on that. Then, are there changes imminent in healthcare? The answer is yes. I do question the readiness for the NHI. I have to be honest, I question it. I question the affordability of a monthly expense over and above the social grant, whether South Africa can afford it in this time and day. I do agree with Carl that there will be specifically for day hospitals huge opportunity to work with government or whatever insurance they put in place to help make it a more cost-effective environment. Ladies and gentlemen, that's my little contribution, the first one. Thank you very much, and I now invite Mark Resnick from PressMed. Mark, wouldn't you please come and address the people? Thank you.
Good afternoon, everybody, and nice to see some familiar faces here again. I'm going to, it's been a long day so far, but I'll try and minimize this to half a dozen slides. I'll take you through afterwards, happy to take questions, but what I do previously, I think it's always good one-on-one. I can give you more in-depth information, and that might, in fact, help you better. What I thought I'd do is just run through very briefly the Australian day hospital industry. This particular industry which we're involved in, we specialize in the establishment and management of day hospitals, We have taken on a new type of strategy, which I'll talk about later. We like to believe in Australia. We do not see ourselves as a big monolithic cruise ship. We see ourselves as a smaller boat, which we can move very quickly because the market does change, and if you're not fast enough with the change, you can be left behind. Our main disciplines that we do in Australia is ophthalmology, ENT, ear, nose and throat, OMF, oral maxillofacial surgery, and a bit of plastic surgery. We do not go through the entire gamut of different disciplines. We like to focus on those where we believe we can get the best margins coming through to the business. We have an organization called the Australian Bureau of Statistics, and very interesting, there are 657 private hospitals, that's day and overnight hospitals, of which what Carl alluded to early on, 357 of them are day hospitals, about 53%. Most of these day hospitals are owned by doctors, so there is a lot of emotion attached to this. And so dealing with them going forward in the growth of the business does take some effort, but there are great opportunities that go with that as well. Just to give you a dollar figure, the private day hospital industry generates over 1.2 billion in revenue from a potential of 1.2 million patient treatments. So it is a very big market over there. Our population, obviously, is much smaller than South Africa, so you can see it's a very interesting dynamic. And the vast majority of day hospitals, as I said, are owned by the doctors in their own capacity or by industry players. And there's a small group of private day hospitals that slowly but surely are growing within the industry. And there's a good opportunity, as I said, to go forward in that area. Just very briefly, our day hospitals, we focus in New South Wales only. And that was a decision that I made. Getting into this market, we had to do it very cautiously and carefully and grow very consistently. We now have 5 day hospitals and 1 laser division. Those are the areas there. This does not include the Coffs Harbour that Carl alluded to earlier on. Very briefly, the executive directors of PresMed, we made a decision to go into Coffs Harbour. We did a lot of work with a group of doctors. It's about an hour flight north of Sydney. And we thought a great area. We had a lot of meetings with doctors, and only once we started in the business, unfortunately, there were 6 ophthalmologists who work in that great area, and 3 of them became involved in a bit of a political and legal problem with each other, and that affected our business. And the executive decided to look at the strategy and try and work out a resolution to it. We had a time limit. If this was not going to be achieved, we would have to cut our losses. Very hard in the business to do it, but it's no doubt the right decision going forward. I would hate to be here in a year's time and then still having to do this and stand in front of everyone with further losses in the business. As Ray Dalio, who's one of America's greatest hedge funders, once said that it is no good just taking aim, and never firing. You have to make a decision. This was a decision that we made, and I believe it was in the best interest of PresMed going forward. Just some highlights within the group, which I think is important. 5 day hospitals, we've just bought into a new one that Carl mentioned earlier on. It's a great facility, an ophthalmic facility, been in the market around about 25 years, owned by doctors, a lot of negotiation to get there, but we're very excited with this. 1 laser vision group and over 130 doctors who are accredited with us in the business. We have over 16,000 patients per annum and a 94% patient satisfaction. Many people would pat themselves on the back that we have a 94% patient satisfaction. We look at the opposite. We say, why? What is happening to the 6%? We have our marketing people that go into this, and actually for those patients, they put their names down. We get hold of them. We discuss it with them, and we see how we can improve on this. We have also instituted in our group consumerism meetings where we invite patients to sit with our executives and our directors. We have this twice a year, where they can openly talk, where they can see that we can improve our business, where we're doing things well. They will tell us whether it's bad and we can improve. They tell us as well. So I think it's very transparent and very important for the business, and very mature of us, I think, to go forward in that aspect. We're very proud that of the 657 private hospitals, day and overnight hospitals, we are the only one in Australia to have received membership of what is called the World Association of Eye Hospitals. And that's something that we're very proud about, and something that they recognize in us, and it's a worldwide organization, that we're doing things particularly in ophthalmology which is recognized, and it really gives me a level of comfort with our doctors and with our staff and our clinical people that we are doing the right thing. We have also become what is known as a RANZCO accredited doctor registrar training program. RANZCO is the Royal Australian New Zealand organization of consulting ophthalmologists. And we have now been recognized as an accredited facility where doctors who come through training can actually come in to our facility. And also as well for us, the University of Sydney, we've now become affiliated as teaching hospitals in all of our facilities. There are strict criteria to actually be accepted. And for me, it's fantastic that our staff have managed to achieve this with our doctor support. Just some group highlights, which is going to overview much of what Carl said, but I'm just putting it into one slide. Over 16,000 patients, a growth on last year, $34.1 million, up 7% on last year of revenue, EBITDA of $4.7 million, which is a 48% growth, and net profit before tax $1.7 million is a 17% growth. And this is from continued operations, which Carl mentioned last time. I think key and important for everyone over here is what is the strategic focus. For obvious reasons, I can't go into the minutiae, so I've tried to genericize this as best as possible. We have a 5-point plan in our strategy. We look at this constantly. We have doctors who are involved in every one of our facilities that sit on the board with us. We also have what we've instituted as a specialist medical doctor grouping, that not only do we have doctors from a board level, but we get key doctors to sit at a non-board level with us and look at various points of strategy. It's important. They are our key players. The staff, absolutely important. Without the right staff, the doctors won't come there. But if the doctor doesn't bring their patient there, we don't have a business. It's as simple as that. So what are our strategies? It's driving up our patient numbers. And how do we do that? I spend an inordinate amount of time with my key executives meeting new qualified surgeons and trying to get them to join existing practices. Very difficult for a newly qualified surgeon to come and set up and try and grow. Rather let them go to a busy practice, get them to feel comfortable. There are patients coming through, there are long waiting lists. The sooner we can get someone in there to increase the drive of revenue into our facility through that, the better it will be. To consolidate surgery, this is a bugbear of ours. It's a very difficult thing in Australia. Doctors work at multiple facilities. They have referrers in various suburbs, so they need to try and do their patients in day hospitals or overnight hospitals within those areas. What we try and do is work with doctors to say, we understand that you need, from a competitive point of view, to actually remain in those areas, but try, instead of doing 10 cases on the list at another hospital, drop that to 6 cases and bring those other 4 to us. We can't force them to do it, we can't force any patient, but it's really having to work with them. We have started to see this is now starting to come to fruition. We are a mature market, as you've heard earlier on, so the growth in there is done very cautiously, and this is a good way of actually doing it. So the second thing is the health fund negotiations. This is the biggest hurdle of entry into the actual market in Australia. If you do not have a health fund, or medical schemes, we call it health fund, if you do not have a contract, you might as well not go into business. By law, they do not have to give you a contract. You have to sit and negotiate with them. So this becomes very important. The bigger the group you are, obviously the more, in inverted commas, power that you have. So that you need to go and work with them. And that was the other reason that we stuck in New South Wales, initially, in this particular instance, that we could go to them and try and get best rebates from those health funds, which will assist all of our facilities. So it is important from the strength of the group to be able to do that. The other thing that I mentioned earlier on, we look at particular disciplines which give us what we believe is the highest rebate and therefore the gross profits within that. The third point over there is cost control objectives and how this is being met. We've got 3 particular areas here. We try and work with our doctors to standardize surgical supplies and lenses. As our business is ophthalmology, it's predominantly close to 70% of our business is ophthalmology. 70% means a lot of lenses. The lens companies are very powerful companies. They have their reps that will go and talk to doctors. The way, very briefly, the rebate system works in Australia is you negotiate with the health funds, they give you a fee. I'm just going to use a round dollar figure, $2,000 for cataract surgery. Within that, all the costs are ours. Every paracetamol you give to the patient, every needle that you use, every lens that you use, that's our cost, not the health fund's cost. So if the lens cost us $1,000 and a rep goes to the doctor and says he has a new lens, and this, by the way, now costs $1,500 and the doctor wants it, we've got to bear that extra $500 cost. So we have to talk to our doctors. We cannot force our doctors not to use that lens. Why? Because they can vote with their feet and they can walk to another facility who will grab them. I always say you can lose a doctor if they're upset in 1 day, and it will take you 2 years to find another doctor to replace that doctor, and you've lost a lot of work coming through. So for us to work with the doctors is important. We do standardization of the lenses. We work together. They understand. We have a number of them that are shareholders in the business with us, that they understand that if they can together agree to a particular lens which offers us further discount because we're using those lenses more, that will fall to our bottom line, and them being shareholders as well will increase their returns on their business. Staff development programs for efficiencies, we do a lot of that to try and support the business in costs and understanding nursing costs there and how to utilize it correctly. We are only open on a Monday to a Friday. The nursing cost is terribly expensive in Australia. It is a day hospital. We sit around about, not giving exact figures for obvious reasons, but above a 60% theatre occupancy rate, which means that we've still got a lot to fill, so we want to make sure we can fill that correctly before doing anything else. And finally, the rental of equipment versus purchasing of equipment. In certain facilities, if we're in a strong cash position, earning a very low percentage, we'd rather go and buy the CapEx than go to a funder who specializes in medical fundings and pay a higher cost there. But it all depends on what the business is looking at and how we're doing. The fourth one is efficient cash collection. Our focus is very much on cash as well. Over 95% in 30 days. As Carl mentioned, in this past financial year, we did not have one bad debt write-off, which is unbelievable. So kudos to our particular staff who work very, very hard in ensuring that patients are informed upfront, doctors are informed upfront, and I just think it's an outstanding result. And finally, the fifth point is pursuing investment opportunities. Once again, PresMed in itself, as I mentioned earlier, we acquired an investment in MetWest, this company, which is an interesting aspect. It is both a day hospital and a consulting practice. It's on one premises. Consulting practice is downstairs, theatre upstairs. It works well. It's a fantastic opportunity. It's taken us a number of years to negotiate with the owners who are very emotionally attached to it, but it's a great way going forward. And likewise, on that same principles, we are once again identified several other opportunities in the business, and we believe, following a similar strategic model, that this will benefit PresMed well into the future. And finally, just a brief summary. Very openly, it is a challenging and competitive market in Australia. We are absolute, resolute, focused to strengthen our current business. We want to make sure that the current business continues to grow, that we look at every opportunity that's available to ensure that we offer fantastic service. And once we implement the strategies, we believe that it will benefit the business. And finally, there's two different types of growth. It's looking at your current business and looking at new business. And we have to carefully, strategically, and with focus ensure that we invest in the right business concerns. And if it means paying perhaps a little bit of a premium, but to go into a business that has got good cash flow, good profit, you hit the road running, and we are of good assistance with them going forward, again, that will be to the benefit of the business. So thank you for your time. And once again, as I said, afterwards, delighted to sit or stand with you and answer questions. At this point in time, we have got, I think, some live...
no questions.
Oh, no questions. All right. I was going to say there were some live things, so we can go to the audience over here. And if you want to speak with Gerard, with Carl and myself, please go ahead. Thank you for your time.
Carl, just can you give us some colour on IFRS 16 leases?
What sort of color would you like to see, Mark?
How's it going to affect you, and in which areas? You know, I'm not sure how much of your buildings, your actual sort of real estate is owned, or possibly leased.
None of our real estate is owned.
Okay.
So we're leasing everything, and yeah, the
Right
problem.
of use assets.
Sorry, just repeat that again.
Right of use assets and leased equipment.
Yeah, lease equipment, not such a big impact on our side. Most of them were immaterial when we did the calculation. The impact that we did see, very interesting, it will increase your EBITDA figures significantly. Like I said earlier, we're not going to speak about EBITDA anymore. But below the line, we did the calculation, it is going to have an impact of about 62 million rand. 62 million rand on the IFRS adjustment on interest.
Okay.
Yeah. And that's for the group as a whole. Because you need to take into consideration, because you have to discount it against the interest rate. And in South Africa, it's quite significantly if you compare it to, say, for example, Australia. Australia, not a very big impact. And if you take, for example, Europe, where it's like 1 or 2% interest, yeah, it's got a significant impact. But that is just the line item, because when we did the calculation, we didn't go back necessarily to see on straight lining what is the difference on that. But that is the straight impact just for that. So obviously you need to take the straight lining out, and you know, I can't unfortunately give you an answer for that. But it's got a significant impact on the leases.
Hi. CEO spoke about the J-curve earlier. Are you able to give us some color on the underlying South African hospitals and how many of them are profitable on a standalone basis?
On the South African side, one of our hospitals has become profitable. It is very interesting. It's not our biggest. It's not the one with the best turnover. It's not the one with the most patients. We've actually analyzed it, and it's the facility with the best doctors mix. And what we see there are, at this moment, 3 facilities which we expect to become profitable within the next year, which are very close. It's our bigger facilities in the south. And then at this moment, there are 3 of our facilities which we are very proud of that are on their own, standing on their own feet, and that they are cash positive, and they're not looking at, increasing their loan accounts.
I do have one more question, sorry. Just with regards to NHI and, positioning yourself to maybe be a better provider to government, let's say it does happen. How are your empowerment credentials, and how are you best positioned to take advantage of that?
Okay. At this moment, we are definitely looking at getting a BEE partner. That's been a talk for some time now. Unfortunately, we've not got to that point as yet. So we are really focusing again on that. I think it's one of the first issues that Gerard is actually going to address, and ensuring that we do get our 100% or our correct triple BEE credentials in place. Any further questions? As Mark said, you're more than welcome to approach any of us if you would like to have a one-on-one. And I'd like to thank you this afternoon for joining us once again, and drive safely. Thank you. There would be some snacks and some cold drinks outside. Thank you.